More on a story that we reported on earlier. It's OPEC versus Russia. The Russians have now topped Saudi Arabia in exports of crude and oil products. That is likely to frustrate OPEC's efforts to lower inventories and maintain higher prices. Russia wants to meet with OPEC members in Moscow this fall. What could this mean ultimately for oil prices? I'm joined now by Fadel Gheit. He is Managing Director of Oil and Gas Research for Oppenheimer. And Fadel, let's start with the fact that OPEC has not invited Russia to observe tomorrow's meeting. What action or talk may come out of the OPEC meeting regarding Russia?
Well, nothing really. They are happy with oil prices. The Saudis said that they are very happy and satisfied with oil prices between 68 and 73, which we now have. It's a far cry from where oil prices were $32 in January, so they are very happy to see oil prices coming back again. Not likely that you are going to see what we saw last year because of all the speculation that the oil price is there. But judging by the current economic situation around the world and even the outlook, in my view, oil prices are still inflated. They do not reflect market fundamentals, and they will have to come down. The question is, will they come down? The answer is probably not very likely because of politics, not because of anything else.
Well, what about the recovery, the global recovery? That is, of course, the watchword. With the recovery, there will be increasing demand, and perhaps that would lift prices for oil.
It is not really clear if the market is lacking supply. There's plenty of oil around the world. Inventory levels continue to rise. The refining capacity in the world is now operating at 20-year lows. So demand for the product is still low. Even if the economy recovers, it is not likely that the demand increase will be anywhere near where we saw in the last 4 years. So demand will probably increase by 1%, if that much. And we have plenty of inventory. OPEC is sitting on 3 to 4 million barrels of spare capacity that they cut in the last 6 months. So I would not worry about supply at all.
Okay, let's focus on Russia again for a moment. To what extent has that country been reinvesting in its infrastructure?
Well, 5 or 6 years ago, we saw a lot of money pouring into Russia. Recently, Russia put the brakes on that. They want to slow it down a little bit. They don't want to create the glut, if you will. But now Russia is seeing an opening here that they can actually eat market share from OPEC, and that's exactly what they are doing. Russia said that they will be satisfied with $60 to $65 oil, what OPEC said we like to see oil prices at a higher level, because Russia has very low production cost and can really slug it out with OPEC.
Now, what about production? Can Russia sustain its production gains?
Absolutely. Russia actually is slowing down production growth. Russia can still increase production at much higher level if they allow foreign companies who have no access to resources, if you will. Russia, on purpose, try to slow down production growth. They can hide that in a major way by allowing oil companies like Exxon, BP, Chevron, whatever, to come in. These companies, they are looking for areas to put money in. They have the resource. They have the strong balance sheet. They have the technology. They need access to resource.
Okay, thank you so much. I've been speaking with Fadel Gheit. He is Managing Director of Oil and Gas Research for Oppenheimer here in New York.